All right. Hello and welcome, everyone. Thanks so much for joining us. We are going to go ahead and get started. Just a few housekeeping notes before we do. This session is being recorded, and you will be able to receive a copy of the presentation after today's session. And we thank you all for taking the time to join us here today. So some of you might be new to Savi, some of you might be returning users, but before we begin, I just wanted to take a quick moment to sort of introduce or reintroduce you to who we are here at Savi. There are a lot of actors in this space, some less than reputable, and we just like to take a moment to help you understand who we are, why we do what we do, and why so many borrowers and organizations trust us across the country. So Savi is a social impact technology startup based in Washington, D.C. We were founded by policy experts and advocates who had been fighting on behalf of borrowers for over a decade. And in 2017, this was the first year that borrowers were able to start applying for this program called Public Service Loan Forgiveness. And over 100,000 borrowers applied and less than 1% were accepted, mostly because of sort of technicalities and administrative reasons. So our founders saw this and decided to do something about it. And so they founded Savi as a technology platform and a service to be able to help borrowers like you and like me. I have a little over $200,000 in student debt myself, to be able to better navigate their student loans, understand what's going on, and then taking it a step further and actually get enrolled and cross the finish line around programs like Public Service Loan Forgiveness. We not only focus on forgiveness, but we help borrowers to unlock additional savings by lowering their monthly payments through things like income-driven repayment plans. Really, the goal being to minimize your monthly payment and maximize that forgiveness. We're a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational webinars and workshops almost on a daily basis for our various partners across the country, so that borrowers can become better educated and informed about their debt. Because when you are more informed, you're more empowered as a consumer. So enough about us. We are going to dive into the good stuff. So we host these all user webinars on the first week of every month. And it's an opportunity for us to share with you the latest in what's going on in the world of student loans, because there's a lot. And whether you're following along closely or not, you shouldn't need to be a student loan expert in order to be able to successfully navigate some of these programs. So we want to just sort of recap some of the most important things that you should know as a borrower. First and foremost, let's talk about the payment pause. So back in March of 2020, when the CARES Act went into effect, payments were paused and interest was waived. So payments $0, interest 0% on the majority of federal student loans out there. And that has since been extended 6 times. Most recently, it was extended again through August 31st, 2022. Meaning student loan payments are expected to resume September of this year, 2022. Okay, so again, to recap this, the payment pause was extended yet again through August 31st of this year, meaning payments as of right now are currently scheduled to resume in September of 2022. Now, could this be extended again? Absolutely, it could. And this is one of the great reasons why being sort of affiliated with Savi, even with just a free account, is beneficial, because we will email you and alert you about any important changes or shifts in the policy landscape that you need to be aware of. So you will, within hours of an announcement being official, have something in your inbox that explains what's going on and lets you know why it's important and how you can use Savi to help you going forward. Okay. Moving on. Now, one of the biggest opportunities for borrowers during this payment pause, specifically for borrowers who are eligible for public service loan forgiveness. And by that, I mean they have been working for a qualifying employer during this time. And we're going to talk more about this public service loan forgiveness program in a second, is that for each month that payments have been paused, so from March of 2020 through what will be August 31st of 2022, that's 30 months. And for each one of those months, you are eligible to receive a free, basically Pslf credit or qualifying payment credit, just as if you had made a payment that month for each month that payments have been paused. All right. So without having to have made payments, you could accumulate 30 towards the 120 total needed credits towards achieving full forgiveness on the remainder of your loan balance. Now, I found many borrowers are either confused or misinformed about this. And actually, many borrowers have opted to continue making payments during this payment pause because they thought they needed to in order to be eligible for forgiveness. You don't, and you don't need to continue making payments. In fact, you can actually have any payments you've made during the payment pause refunded to you. It's a simple process, and our support team can help you. We have an email template that you can send to your servicer. But if you have been making payments and you think you're going to be eligible for public service loan forgiveness, you might want to think about having those refunded to you. Moving on, one of the things that's causing a lot of confusion these days and is going to continue causing confusion going forward is the fact that 3 of the biggest federal servicers out there, Navient, Granite State, and FedLoan, have announced within the last year that they are not renewing their federal contracts. And so therefore, any borrowers with loans that were serviced by those entities are going to be transferred to another federal servicer. Now, just to pause here and give some context, federal servicers are companies like Navient, Nelnet, Mohila, Great Lakes, et cetera. There are about 9 to 10 total federal servicers out there. These are companies contracted by the Department of Education in the repayment and management of your student loan. This is the account that you log into to set up your auto pay and get enrolled in repayment plans and things like that. Now, just to clarify, Savi is not a student loan servicer. So you would never start making your payments to Savi. You can kind of think of us more like a facilitator or an intermediary or advocate on your behalf. So we might do things like submit an application on your behalf or get on the phone with you and your servicer to resolve an issue. But we would never sort of take the place of that servicer. So when it comes to these servicer transitions, if you had Navient, you are being moved to Aidvantage. If you had Granite State, you're being moved to Ed Financial. And if you had FedLoan, you are being moved to Mohila, or you might have been moved to Nelnet. The one key thing here about FedLoan servicing is that FedLoan was the only servicer in charge of managing what's called the Public Service Loan Forgiveness Program. Meaning if you had ever submitted applications before for the program and were accepted, if your loans weren't already with FedLoan, they would have moved to FedLoan. Now, this summer, starting in July, the Public Service Loan Forgiveness Program, because FedLoan is leaving, is going to transition to Mohila. And so all borrowers who are trying to apply for public service loan forgiveness are going to transition over to Mohila. However, for right now, FedLoan is still continuing to manage that program. We've got about another month left, okay? And that means applications and forms and things like that still need to be directed to FedLoan, right? Now, 2 pieces of advice for any borrowers who think that they might be impacted during this time. First and foremost, you're going to want to make sure that your contact information is updated on your servicer website or your account. This way, in case you are impacted, because these transitions are basically going to take the rest of the year, the only way that they're going to be able to contact you is if they have that updated contact information. So that's most important. Second of all, if you have any sort of downloaded documentation already, that's great from your servicer site, but you're going to want to make sure that you try to download a copy of either your payment history or any statements, online statements that you might have in your current servicer account. And I would say this across the board for any borrower, whether you are being transitioned or not. It's just good sort of borrower hygiene to have that on record in case there are any discrepancies going forward. One of the biggest pain points that borrowers always face around this program, and by that program, I mean public service loan forgiveness, is that it relies on payment count history. And oftentimes there have been issues with FedLoan properly counting payments and awarding these credits towards public service loan forgiveness. And so just having a copy of your payment history before your loans transfer is a good thing, because once your loans transition, you won't have access to that previous servicer account. So it's just good to always have that. Now, if your loans have transitioned and you didn't get a chance to do that, that's okay. There are other ways for us to go back and verify. But for anyone out there, it's just good to download a copy of that. All right, last but not least, The Pslf limited waiver. This is open and the deadline by which you need to take action, and we're going to talk about this whole limited waiver in much more detail in a second, is open until October 31st of this year. Okay, I'm going to talk about what that means here again, like I said, in a few minutes. But essentially, back in October of last year, 2021, the Department of Education came out with a big announcement, essentially an overhaul to the Public Service Loan Forgiveness Program. And they're calling it this Pslf limited waiver. And what they mean by that is not a physical application or thing like that. It's representative of a period of time between last October and this coming October 31st, during which essentially borrowers can take action to retroactively receive credits for payments made that they might not have been eligible to receive before. All right. So borrowers that were previously ineligible or rejected or are now able to receive credits towards the program. But you have to take action before October 31st of this year. Again, we're going to go into much more detail on that because I know most of the borrowers in the Savi community are public service loan forgiveness eligible. So I really want to help you to understand what this means and how this might impact you. Okay. Let's see if any questions before I move on and talk more about this public service loan forgiveness limited waiver. And I see one that came in through the Q&A. Can you email the template? If you can contact our support team, this goes out to Nancy, they will be able to send you that email template. So you can contact the support team through your Savi account. I don't have a copy on me handy, unfortunately. Okay. All right. And Angie, I see your chat as well, and I will make sure that we connect before today's session ends. So appreciate you reaching out. Okay. So when it comes to public service loan forgiveness, this has always been a very notoriously difficult program for many borrowers to achieve success. Public service loan forgiveness, or PSLF, started in October of 2007, October 1 specifically of 2007. Okay. And as I mentioned before, 2017, 10 years later, was the first year that borrowers could start applying. And they applied in mass. Over 100,000 borrowers applied, and less than 1% were accepted. And so over the years, there's been a lot of push from the advocacy community to help reform these programs. And that finally came about this past October through this limited waiver. So in trying to sort of explain how you might benefit from this limited waiver and what it means, I find it's first helpful to talk about public service loan forgiveness before. And by before, we mean before October of last year, before this limited waiver went into effect, the original rules of the program, okay, to help understand why there was this change and how you might be able to benefit. So we're going to sort of start with the basics around public service loan forgiveness. Again, this is sort of the original rules of the program. So public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000. It could be $500,000. It doesn't matter. Tax-free. Okay, so there are no tax implications here. After you have made 120 qualifying payments. Now, I say qualifying payments in air quotes because the devil's really in the details as to what constitutes a qualifying payment. Now, a few things before I sort of talk about what three things, as you can see here on your screen, constitute that qualifying payment. I want to sort of clear up some common misconceptions about this 120. So first of all, these 120 payments do not need to be made consecutively. They just need to be made cumulatively. So you just need to reach 120 total payments. Okay. So let's say you worked for a qualifying employer in the public sector for 2 years and you accumulated 24 qualifying PSLF credits. And then you went and left and worked the private sector for a little while. Nothing happens to those credits. They simply pause until if you at any point resume your eligibility by your employment, and then you are able to resume accumulating credits towards the 120. All right. So it doesn't need to be consecutive. The second thing, however, about these 120 is that you can only receive one qualifying payment credit per 1 month per one payment, meaning you can't double up on payments in a month and get 2 credits. Okay. The maximum amount of PSLF credits that you can receive in a given calendar year of 12 months is 12 credits. All right. So meaning if you need to get to 120, you can only get 12 credits a year. You guys can do the math, right? That's 10 years, right? Before you'd be able to reach forgiveness. That's why many people refer to this as a 10-year program. However, it could take longer if you're not making those payments consecutively. And again, you don't need to make them consecutively. All right. So you can't make a lump sum payment or double up and have that count for more credits. The earliest you can achieve forgiveness under this program is 10 years. Okay. Now, what constitutes a qualifying payment? Well, it's really these three things that you see on your screen, and you need to achieve them simultaneously. So first and foremost, qualifying employer. You need to work for either a government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3. Okay. You must work a minimum of 30 hours a week or more. That is sort of the only stipulation here. Okay. Now, let's say you work part-time at a hospital, a qualifying organization, nonprofit, and you work part-time at another hospital, also a nonprofit. So long as combined, you're working 30 hours or more a week, and so long as both or multiple employers are all qualifying employers, you can still qualify for public service loan forgiveness. So you don't just need to work full-time at one institution in order to qualify. You can combine multiple employments in order to qualify for public service loan forgiveness. All right, so that's number one, your qualifying employer. Number two, let's talk about qualifying loan type. Now, again, just as a reminder, these were the original rules of the program. And under this waiver, this has since changed. And we're going to talk about those changes in a second. But you needed to have a qualifying loan type. And the only loan type that qualified were direct federal loans. The direct loan program is it's a type of federal loan out there that started in 2010. So if you have a loan from 2010 to present, there's a very good chance that it is a direct loan. Easiest way to tell if it's a direct loan is it will literally say the word direct in the loan title, might say DL, which stands for direct loan. Okay. Now, let's say you didn't have a direct loan. You had an older type of loan known as a FFEL loan, FFEL or FFELP. This stands for Federal Family Education Loan Program. This was simply the loan program in existence prior to 2010. If you had one of those loans or a Parent Plus loan, you would need to consolidate that loan into a direct consolidation loan. And then after that point of consolidation, you would start to be able to accumulate credits towards that 120. However, any payments made before that consolidation were ineligible to count. So let me tell you how this played out in real life for many, many borrowers. Public servants who had been working for 10 or more years, thinking they were going to be eligible for this program, went to apply starting in 2017 and were told you're ineligible because you've got a FFEL loan. You need to consolidate that loan and then basically work another 10 years before you're eligible for forgiveness. So to say this was frustrating was an understatement. And so this is one of the main reasons why so many advocates have pushed over the years to have this program reformed, because a technicality like that so many borrowers are unaware of was keeping them out of the promise of the program, which really was, if you work in public service for 10 years, you can have your loans forgiven. It's as simple as that. Unfortunately, these technicalities tripped up many, many people. So again, you need to work for that qualifying employer or employers, have a qualifying loan type, direct loan, and last but not least, you need to be repaying that direct loan on a qualifying repayment plan. And the only types of repayment plans that qualified are what are called income-driven repayment plans. There are a couple different types of income-driven repayment plans. Doesn't matter which one you were on, but you had to be on one of them, and you had to make that payment for the on-time and full monthly amount. So you need to satisfy all three things: employment, loan type, and repayment plan, and make a payment satisfying all three simultaneously. And you need to make 120 of those in order to achieve forgiveness. Again, under the original rules of the program. Now, how did that work out for many borrowers? Well, pretty much from 2017, like I said, the first year the borrowers could start applying, up until really about September of last year, right before this waiver went into effect, the success rate for borrowers trying to pursue public service loan forgiveness hovered around 1%. Okay. And it was exactly because of these technicalities. Most borrowers were rejected because they didn't have the right loan type. They weren't in the right repayment plan. All of these things prevented borrowers from achieving success, even though they had worked in a qualifying employer for 10 or more years and potentially had been making payments. These sort of technicalities around loan type and repayment plan kept them out of the program. So, as I mentioned, in October of last year, 2021, the Department of Education finally came out with an overhaul to the program, but it's a limited overhaul, okay? And this is what they're calling the Pslf limited waiver. And essentially, from this past October to this coming October 31st, 2022, they've expanded the eligibility requirements around the program to sort of help remove some of these technicalities. And so it doesn't mean that you need to reach 120 before this coming October, but it simply means that if you want to be able to receive potentially retroactive credit for payments that you've made up to this point that would have normally not counted, you are able to do so. You just need to take action to do so before October 31st of this year. So here's how they've expanded these eligibility requirements. So first and foremost, and I'm going to sort of talk through them in the same three categories here of employment, loan type, and repayment plan. So when it comes to employment, not much has changed here. You still need to be employed by a qualifying employer, minimum of 30 hours or more a week. The one thing that they have changed here slightly is that now at the time of forgiveness, or by the time you reach 120, you don't need to be employed by a qualifying employer. So to give some context here, under the original rules of the program, once you had reached that 120 and you went to apply for the program, you needed to continue to be employed by that qualifying employer, basically at the time you were applying and up through the time you actually received forgiveness. Now, this processing time could take upwards of a year. That's how slow it was. And many people had banked on being able to retire at that point, right? Once they had reached that 120. So they've now removed that. And now you have people who had previously made 120 payments. And now because of the expanded eligibility around loan type and repayment plan, those payments are now eligible. And just because they're retired or no longer working has nothing, it's irrelevant. They're able to receive full forgiveness under the program right now. All right, so that's sort of employment. Number two, let's talk loan type. So remember how I talked about on the original rules of the program, you could only have a direct loan. And if you didn't have a loan, you needed to consolidate your loan into a direct loan, but only after the point of consolidation could you start accumulating eligible credits. Well, for the borrowers that have FFEL loans, okay, now they've expanded it so that any payment you made previously to consolidation or prior to consolidation or after can now count. You still need to consolidate that FFEL loan, okay, into a direct loan. However, now all of the payments you made prior to consolidation are able to count, okay? And last but not least, qualifying repayment plan. You do not any specific type of repayment plan. All repayment plans will count, okay? Any past payment plans, whether it's standard, graduated, extended, income driven, and you don't even need to have made that payment for the full on time or monthly amount. It could have been late and it could have been slightly less than the amount required. All right, they're basically being very lenient about what's counting. So now you can kind of think about it like this. And here's sort of a good sort of summary if you're trying to think, okay, how is affecting my eligibility? So the eligible time frame that you can look at is October 1, 2007 to present day, okay? That is sort of what, as far as any employment or payments goes, what your eligible time frame is going to be. If you've been working in public service and paying your loans since 1995, unfortunately, from 1995 to October 1, 2007 is irrelevant for the purposes of this program and won't count. It is only October 1, 2007 to present, all right? So that's what we're looking at. Now, in that time frame, if you worked for a qualifying employer or employers, many people have worked for multiple employers, okay, and were making payments on your loans, all right, regardless if it was direct or not, those are now able to count. And if you think that you've made 120, feel free to raise your hand, because I always love seeing borrowers who are maybe able to realize this live when we do these webinars. If you think that you made 120, then you should be eligible for forgiveness right now. Now, you might have still a FFEL loan that you're going to need to consolidate in order to make that happen, okay? You're going to want to consolidate first, and then you're going to want to take steps that I'm going to talk about in a second in order to take advantage of this. Now, let's say you're not at 120, but let's say you think you might be a lot closer than you thought you were because now more payments are going to be able to count. That's great. Again, everyone right now, regardless of where they are in this process, is going to want to do the same thing. PSLF Employment Certification Form. It's also known shorthand as the PSLF form. This is the one and only form for the Public Service Loan Forgiveness Program. That's it. It's the one and only form. It's called the Employment Certification Form. It gets signed off by you, the borrower, and it gets signed off by your employer or multiple employers if you have multiple employers that you need to certify. And then that gets submitted to Fed Loan Servicing. Up until basically July 1st, or when they officially announce that it needs to go to MOHELA, these should still all be going to Fed Loan Servicing. And that is the only way to essentially have your account and have your situation reviewed under this expanded eligibility for the Public Service Loan Forgiveness Waiver. That's the only action you need to take before October 31st of this year. Okay. So I would say, don't worry about if you think you're eligible to, regardless of where you are, don't even worry about your repayments right now because payments paused, and likely your servicer is going to be shifting depending upon, whether or not you're with Fed Loan already or whether you need to go to MOHELA, and you can worry about that when loans have transferred. But for right now, any borrower that is eligible for public service loan forgiveness needs to be submitting that employment certification form. Okay. So what has this resulted in and sort of the impact and progress to date of this limited waiver? So there was just data released actually this past month, and thus far over 127,000 borrowers, let's go back here, have received forgiveness since 2021, October of 2021. That's huge. It's more than the entirety of the program in itself. That compares to just 17,000 borrowers who received forgiveness from basically January 2017 up to that point. So this is huge. About 500,000 borrowers who are already sort of in progress for public service loan forgiveness are going to receive an additional, on average, 2 years worth of PSLF credits, and that should be updated automatically to their Fed loan account. And then you have about 250,000 borrowers who have submitted applications, this PSLF form, since October of 2021, but have not received forgiveness solely because they did not yet consolidate. So if you still have that FFEL loan or that Parent Plus loan, you need to consolidate those loans and then submit this PSLF form. Okay, that's an important part here. But I want to make this point, about 25% of all student loan borrowers out there are estimated to work in public service, meaning there are millions and millions of people out there right now who are eligible and could be sitting on full forgiveness immediately of their student loans, but have no idea about this. And they need to certify their employment in order to sort of get into the PSLF program before October 31st. So that's why we sort of make this big push to all of you about that employment certification form, because that is the one and only action you can take in order to sort of initiate this process for yourself. All right, I'm going to pause here. Let me see if there are any questions. Please feel free to drop them in the chat or the Q&A. I'm happy to sort of answer some of these out loud. Now, I see a question coming in from a borrower who asks, I paid off my Navient loans before I knew about this. How do I get credit or forgiveness on those loans and refund what I paid? So unfortunately, this goes out to Nancy, if you've already paid off the balance of the loan, there is no way to retroactively have those forgiven. If the balance is zero, the loans have been paid off. Unfortunately, that's not possible. You're not able to sort of retroactively receive forgiveness. And that's only because the loan has been paid off. I know it's not fair, and I wish that wasn't the case. But it is you're only able to sort of receive a refund if you've been making payments on your loans over the past 2 years, but you still have a balance. All right, let's see here. A couple other questions. Anything for future loans? So for future loans, things are still a bit up in the air, I would say, as far as what the income-driven repayment and public service loan forgiveness landscape is going to look like. I can say this: if you have the student debt right now, any program or any changes you will be grandfathered into. So, under the previous administration, presidential administration, there was a lot of concern about the program being sort of eliminated. And what I would tell borrowers is that it's written into the law that anyone with a loan and debt would be grandfathered into the program. So even if that did happen, you'd still be able to benefit. It would only impact new borrowers. So that's all I can really sort of say on future loans. And to Gloria, hi Gloria, I know I owe you a return phone call. Yes, let's please chat. If you need to hop off, thank you so much for pinging me and hopping on here today. Or if you want to stick around, and we can chat after this as well. I will be around. All right, let's see here. Okay, getting some great questions in the Q&A or in the chat. Let's see. So Jim asked, should we finish the consolidation process before we submit the Pslf employment certification form? Yes, you should. You should consolidate those loans. Now you are only able to consolidate them with MOHELA. So you should consolidate the loans with MOHELA, and then you should submit the employment certification form. Someone else asked, how to consolidate Parent Plus loans to qualify for Pslf? So the consolidation process is pretty easy. You can access it through studentaid.gov, and I'll put this in the chat. You can log into your federal student aid account. Let's see, studentaid.gov. You can log into your federal student aid account, and when you log in, you can go to manage loans, and under there you can consolidate loans, and you're able to do this pretty much electronically in about 5 minutes. And it'll select the loans. You want to select all of your loans to consolidate them together. And I'll tell you why. And who out there, I'm just curious if you can, by raise of hands, maybe who out here has Parent Plus loans? I'm just curious. Okay, a couple of you. And I'm curious, maybe you can put this in the chat as well. Do you have Parent Plus loans and other loans as well? Like say maybe your own loans? The reason why I ask is this. Okay. So if you, well, I will say this, and this is going to be a little bit into the weeds, but this is what these sessions are for. So if you have Parent Plus loans were not included under the limited waiver, this Pslf limited waiver. And what I mean by that is, unlike these older FFEL loans, right, that if you consolidate now, you can get credit for the payments made before consolidation. That's not the case with Parent Plus loans. If you consolidate your Parent Plus loan in order to be eligible for Pslf, you will still start basically back at zero. However, if you consolidate your Parent Plus loans and you have other loans that you consolidate them with, they will have to be federal loans, direct, FFEL, what have you. This is sort of a workaround and a hack that's only available during this limited waiver. You can essentially take the credit count of those other loans. So I'll give you an example. You have Parent Plus loans from the past couple of years, and you've got your own loans. Maybe you're making payments on those loans for, 8 or 9, let's say you've been making payments for 10 years on those loans. If you consolidate, or, you're encouraged to consolidate, and you just consolidated your Parent Plus loans, you didn't consolidate them with the other loans, your loans would start back over at zero, and you would basically have to work another 10 years before you get forgiveness. But if you consolidate those Parent Plus loans with your other loans, and let's say those other loans have 120 credits, the Parent Plus loans will take the credits of the other loans. So now all of your loans have 120 Pslf credits. You're getting forgiveness on all of the loans. So if you have, and this is the same thing goes for any types of loans right now, and it's really only right now under this limited waiver that this is the case, I would encourage anyone who has multiple loans from different periods of time, consolidating them all together. And you can always ask our Savi team if you have any questions, because they're able to take the credit count of the oldest loan. So you can get a lot further than if you just consolidated that individual loan, which you can do through the system. And I know that this is confusing and it's a lot, but it's something that potentially can save you 10 years of having to basically start over and work again on, towards forgiveness on those loans. Okay, let's see. Couple other questions. Where do I get the employment certification form? So you can get it from studentaid.gov. If you Google Pslf employment certification form, it should be one of the first things that pops up, and you can access the form there. Someone else asked, can we get 30 payment credits if our payments are not starting until September due to the pause? So yes. Now I should, let me back up a little bit, Kimberly. The 30 payment credits, if your payments or if your loans have been in repayment leading up to, and by in repayment, I mean, you graduated a couple of years ago or however long ago you graduated and you've been benefiting from the payment pause, then yes, if you just graduated and your loans don't start until September going into repayment, then no, because your loans technically weren't in repayment up until that point. Does that make sense? So depending upon, when you graduated and how long they might have been, in repayment is going to sort of matter there. Okay, let's see if there are a couple other questions. So someone asked, my loans are consolidated through First Mark. Is this qualifying? First Mark sounds like a private or commercial lender, which if in that case, the loans might be private. Our team can definitely double check for you, but if the loans are private loans do not qualify for any federal forgiveness or repayment programs. And so you definitely don't want to be, many people confuse refinancing with consolidation. Consolidation is a free federal process by which you are basically creating what's called a new direct consolidation loan, but it's different than refinancing. Refinancing will turn a federal loan private and thereby make it ineligible for not only this forgiveness, but it will make it ineligible for any type of mass cancellation that might be coming down the line in the next couple of weeks. And, between us all here, it's very likely that that's going to happen, that we will see some type of amount of mass cancellation, likely around $10,000. What that's sort of being debated right now is sort of the levels and limits of means testing, meaning, under a certain income will be eligible to receive this. But if you refinanced your loans, you're going to turn them private. They're not eligible for the payment pause. They're not eligible for Pslf. They're not eligible to benefit from cancellation. So definitely an important thing to consider. All right. Let's see here. Do we submit our Pslf through our borrower, mine is Great Lakes, or through you or on your own? You can do through either, but not Great Lakes. So you don't want to submit it to Great Lakes. You would want to submit it to Fed Loan Servicing, and Savi can submit it for you. That's one of the benefits of the program. Savi is able to submit those forms for you when using the tool. All right. Let's see if there are any other question here. All right. So I see one that came through. My wife and I have been public school teachers for 20 plus years, and I hope it's okay that I'm reading these out loud. I won't share borrower names, but I think it's helpful for everyone to sort of hear some of these. My wife and I have been public school teachers for 20 plus years. We have an old consolidated spousal consolidation loan, husband and wife. They were Stafford subsidized loans. I have a separate Fed loan from 2015. We were told we could not consolidate and get Pslf. So that is correct. Currently with those spousal consolidation loans, these loans are no longer in existence and you are not able to consolidate and get Pslf. Those loans are not part of the program. You are able to on that 2015 loan, however. But I will say this, the spousal consolidation is an issue that we have brought up to the federal ombudsman herself, Bonnie Luttrell, and others in the policy field. And this goes out to Grady. I would be happy to take down your email address and your story. I don't know if you work with Savi already, but we are trying to collect stories of spousal consolidation loans because just like in your instance, you should be able to be eligible for Pslf. And we think that this is an easy policy fix that could be included in future limited waivers. And so we're trying to push on this and collect as many stories as we can about spousal consolidations. And this is exactly how we got the overhaul to happen in the first place. Last October was sharing stories of these fellow borrowers, who had been screwed over by this process. So Grady, I'm going to ask if perhaps you can actually help me out here just because, so I don't forget, the email to our support team I'm putting in the chat right now. If you are able to basically just send them an email, you can say you attended my webinar and explain that you're a spousal consolidation situation, and they'll know what to do from there and can follow up. If you're able to maybe send an email to that would be great. That way it'll open up a support ticket and we can track that conversation. Appreciate that. Okay, few more questions that come through. Does it look like cancellation will also be for those that are not yet paying? You know what? That's a good question, but it should be. Yeah, if you're not paying it, it doesn't matter. If you've got the loan balance, but that has sort of yet to be seen. They could limit it in some ways. So I would say stay tuned. And if that's because you're not in repayment, as in you've not graduated yet, that might be something that they are considering, not including. So unfortunately, I don't have a good answer for you on that one. I graduated in December, so my loan should have been due in May. Thus, the reason for asking if the cancellation for this loan. Oh, perfect. So if you graduated December, your loan should have been due in May. You're going to qualify for that cancellation. You'll be in repayment. So far, 7 payments qualified. Should the amount I owe decrease? No. So on public service loan forgiveness, that amount that you owe, you're going to be on an income-driven repayment plan likely, isn't going to decrease. It's going to be based on your income. So you're not going to see any sort of, your balance isn't going to go anywhere really until you reach the 120. All right. So it's not until that 120. How about a May 2022 graduate? That's a good question. Technically there's sort of a 6-month grace period, and then loans go into repayment. That's a good question. I don't have a good answer for you, Sandra. But we should know more as soon as this sort of announcement's made. I would think that they would include those borrowers in there, but I can't speak, with certainty on that one. All right. Are there any other questions that I might be able to help any of you all here? I hope this was helpful, and want to make sure that anyone we need to connect with support, or if you're having issues getting an answer from support, if I can escalate those in any way, please let me know in either the chat or the Q&A. I think I was able to get to everyone's question. There should be an email going out tomorrow with access to the recording of this webinar, so it should land in your inbox. But please feel free to reach out to our team if that does not happen. We've had some issues with the email addresses that people are using to sign up for the webinars, maybe being different than their Savi email addresses. But you can always reach out to, and I'll put this email address again in the chat, partners@buysavi.com. That will create an automatic support ticket if you email that address. All right, someone asked if the president passed some loan forgiveness, will it extend to Parent Plus loans? So it should be to anyone with federal student loans, but you know what? They did this to Parent Plus loans with this limited waiver. They limited it to only loans taken out by students. Now, I will tell you, the fastest growing demographic of student loan borrowers is 50 plus. It's parents taking out loans for their kids. So it would really defeat the purpose of this if they limited that. But I will get off my soapbox here. So I hope that it will be extended to Parent Plus loans. It should. Any federal student debt, it should extend to. Let's see. Jim asked, do you have any advice on how long the process should take with Mohila? I applied several weeks ago and haven't heard from them yet. So Jim, unfortunately, it's sort of a hurry up and wait situation here. We are hearing that it's taking upwards of 10 weeks for these things to process. So I would say this, keep monitoring your account. There's this transition going on between FedLoan to Mohila. You also want to make sure if you've submitted those applications to Mohila, they aren't yet processing those yet. So you want to submit those to FedLoan first. I know it sounds counterintuitive. Your loans might be with Mohila now because you consolidated, but you should submit those to FedLoan. In addition, if you've already submitted them to Mohila, it's going to be quite a bit of a mess. But it is taking upwards of around 3 months sometimes for these processes to take place. Okay. All right. Any other questions from any of you out there? I hope this was helpful. Appreciate. All right, Angie, I've got your email. Thank you for noting that. Thank you for being so patient, Angie. I really appreciate it. And Gloria, let's see. I'm going to send you a message right. Okay. Let's see. I recently got notified that my loans are serviced by Advantage. Does this change anything in the process? No. Likely you had Navient and they moved to Advantage. And what you're going to want to make sure that you still do, though, is submit those employment certification forms to fitness. But it's not going to change. It's not going to, impact you otherwise. What's likely going to happen is you will submit those to FedLoan, and then your loans will actually be moved to Mohila at one point in the next couple of months once those sort of forms get processed. But for right now, they still need to go to FedLoan. I know it's confusing. Okay. All right. Well, it looks like that's it for our questions that have come through. I hope this was helpful. We'll be doing more of these. I know we usually have them in the first of every month, or the first Wednesday of every month, but we're definitely going to be adding more and some sort of office hour style where you can kind of come on, interact with me and our team directly and get some answers to your questions. And we hoped to see you all in the future. And do private nonprofit colleges count as nonprofit organizations? If they are a registered 501c3, then absolutely yes. Most higher ed does, surprising people. And you can use your Savi account. You can actually, when you get to the employment section, look up your employer and it'll tell you if it's eligible or not. All right. Well, thank you so much to everyone. And I hope you all have a great rest of the day. Stay safe, be healthy, and look forward to talking to you soon.